गुड इवनिंग सर।
गुड इवनिंग मैम, कैसे हैं?
मैं बिल्कुल ठीक सर, आप बताइए कैसे हैं?
बस बिल्कुल सब फैंटास्टिक।
अरुण सर ने भी ज्वाइन कर लिया।
नमस्कार अरुण जी।
सर अरुण सर आप म्यूट पर हैं।
हाँ, गुड इवनिंग सर।
गुड इवनिंग अरुण जी, गुड इवनिंग।
जी 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 जी। सो सर अभी बस ज्वाइन कर रहे हैं बाकी सभी पार्टिसिपेंट। मीनवाइल हम स्टार्ट कर लेते हैं बिकॉज आपका टाइम काफी कम है आपके पास। तो कंसीडरिंग मैम यू कैन स्टार्ट द।
श्योर सर। सो लेट्स स्टार्ट विद अ short introduction of Pankaj sir. Hello everyone. Today we have CA Pankaj Saraogi, who is member of ICAI since 2007 and also alumni of SRCC, the most reputed college in India in the field of commerce. He was the 10th rank holder of CA final and had highest marks in direct tax laws. Sir has vast experience in direct tax laws and was special invitee of Direct Tax Committee of ICAI for year 2018 and 19. Pankaj sir is an eminent speaker and had addressed in various seminars, workshops, trainings on direct taxes. Those are organized by ICAI, many PSUs and corporates. So today he is taking session on tax audit clause by clause discussion. So now without taking much time, I am requesting sir to take forward. Thank you sir, over to you.
थैंक यू मैम, थैंक यू फॉर माय इंट्रोडक्शन। फ्रेंड्स, अगर मैं इंट्रोडक्शन में अपना कुछ इजाफा करूं, कुछ एड ऑन करूं, तो मेरे हिसाब से मेरे कहीं ना कहीं इंट्रोडक्शन क्वालिफिकेशंस में ये भी आता है कि मैं मारवाड़ी हूं, फिर बनिया हूं, चार्टर्ड अकाउंटेंट तो हुई, मेरे पिताजी भी चार्टर्ड अकाउंटेंट हैं, और हाईएस्ट क्वालिफिकेशन अगर देखूं तो मेरी स्पाउस भी चार्टर्ड अकाउंटेंट है।
वेरी नाइस सर।
मैं वो नाइस है या नहीं है तो उस पर मेरे को हरिवंश राय बच्चन जी की एक कविता याद आ जाती है कि शोषित ही जानता है शोषण का स्वाद, घोड़े की नाल का स्वाद घोड़े को ही पता होता है। तो ये नाइस है या नहीं है, जो लास्ट में मैंने स्टेटमेंट बोला कि स्पाउस भी चार्टर्ड अकाउंटेंट है, तो उसका एक्सपीरियंस मुझे ही है। जोक्स
सर मेरे
अपार्ट,
केस में भी ऐसा ही है, मैं और मेरे हस्बैंड हम दोनों चार्टेड अकाउंटेंट हैं।
तो मैडम फिर तो कभी उन्हीं के साथ मुलाकात करेंगे और आपस में जो भी हैं बातचीत करेंगे। तो फ्रेंड्स, आज का टॉपिक टैक्स ऑडिट, और आज का शब्द मैं वापस लूंगा कि आज का नहीं है, 1985 से देखिए टैक्स ऑडिट का कंसेप्ट इंट्रोड्यूस हुआ, और तब से लेके अभी तक मेरे हिसाब से जो मुझे अपने फादर से भी बात होती है कि ये अभी तक एक डिस्कशंस का पार्ट है। ठीक है, बहुत सारे क्लॉजेस धीरे धीरे पिछले 7-8 सालों में ऐड हुए हैं, बट उन पुराने क्लॉजेस पे जो पहले भी थे उन पे आज भी डिस्कशंस की रिक्वायरमेंट रहती है, और शायद इसीलिए आप और हम इस पर्टिकुलर प्लेटफॉर्म पे बैठे हैं डिस्कशन करने के लिए। तो इस पर्टिकुलर एस्पेक्ट पे देखूं तो एजुकेटिंग बहुत प्रोएक्टिवली, जो भी ज्वलंत कहते हैं ना, जो हॉट इश्यूज हैं उनके ऊपर कहीं ना कहीं सेमिनार्स रखता है, वेबिनार्स रखता है, जिससे कि हम सबका नॉलेज अपग्रेड होता रहे। तो मेरी भी कोशिश रहती है कि एजुकेटिंग अगर कोई सेमिनार ऑर्गेनाइज कर रहा है डिफरेंट फील्ड्स पे तो उसको अटेंड भी करूं, और शायद उसी कारण मेरे को भी अपॉर्चुनिटी मिली कि आप सबको मैं एड्रेस भी करूं। तो मेरा भी पर्पस यही रहेगा कि आप सबके एक्सपीरियंस है जो आप डे टू डे लाइफ में कर रहे हैं उससे मुझे कुछ सीखने को मिले, क्योंकि जब आप कुछ पर्टिकुलर क्वेरीज पूछते हैं, कुछ डिस्कशंस करते हैं, तो कहीं ना कहीं देखिए हमारा भी माइंड दौड़ता है, तो उससे बहुत अच्छी लर्निंग मिलती है। तो मैंने आपको स्टार्टिंग बताया जैसे बनिया हूं, तो कोशिश रहेगी कुछ लेके जाऊं, दे पाऊंगा नहीं दे पाऊंगा वो तो आप सब बताएंगे लास्ट के अंदर। तो फ्रेंड्स स्टार्ट करते हैं। देखिए हमारा टॉपिक है कि क्लॉज टू क्लॉज डिस्कशन, तो उसके अंदर जो मेरे हिसाब से रेलेवेंट इश्यूज हैं, तो उन क्लॉजेस पे उन पर्टिकुलर एस्पेक्ट्स को मैं यहाँ पर डिस्कस करूंगा। देखिए हम उस पर डिस्कशन करें कि लॉ क्या कहता है, और ये क्लॉज है, ये इंट्रोड्यूस हुआ है, इस कॉलम में ये भरना है, तो मेरा वो फोकस नहीं है, क्योंकि जो बेसिक है, जो हमें ऑलरेडी पता है, जिस तरीके से हम प्रैक्टिस करते आ रहे हैं, तो वहां पर उसको डिस्कशन करें तो आपका समय बहुत कीमती है। तो जहां पर भी हॉट इश्यूज है हम डिस्कस करेंगे। उससे रिलेटेड अगर आपका कोई पर्टिकुलर इशू हो तो मोस्ट वेलकम टू आस्क इन बिटवीन थ्रू चैट बॉक्स, अगर आप पूछना चाहें या हैंड रेज करना चाहें, टाइम परमिट करेगा तो उन क्वेरीज को मेरी कोशिश रहेगी कि हम साथ साथ में लेते हुए चलें, जिससे कि वहीं पर डिस्कशंस हो जाएं। अच्छा, कुछ रिक्वेस्ट आ रही है कि यहाँ पर इंग्लिश के अंदर कम्युनिकेशन करें, So I will try my best. I have to take care of the participants we have throughout India. So I will try my best to go by the as much as possible in English. So
Yes, sir.
let me.
Most of our members are from the South India, so it will be difficult for them to
Okay,
understand.
no issues. Oh, no issues, no issues.
Thank you, sir.
Thank you. I hope this particular PPT is visible to all.
Yes, sir, it's visible.
Yeah, thank you, ma'am, for the confirmation.
Thank you.
So friends, what was the basic purpose of tax audit when it was introduced? Obviously, it has not been stated anywhere in a particular, you can say, government documentation, but we can try to derive. In my opinion, the basic purpose of tax audit was to make the assessees tax compliant and to directly or indirectly help the government and the assessing officers in saving their time and money and efforts. And this particular aspect can be derived from the clauses which were there up to assessment year 13-14. Friends, up to assessment year 13-14, if I talk about, the most focus was upon the compilation of the data in terms of law, in which requirement of a depth understanding, you can say implementation of the law was not required. Like we have to make the comments upon the provisions like section 40A3, 43B and all sort of aspects, like provision for gratuity, employees contribution to gratuity fund, ESI funds, whatever. The purpose was that when the auditor is required to certify these things, obviously the assessee is not going to commit such kind of mistakes. Obviously, it will save the time of the assessing officers finding out such kind of non-compliances or disallowances under the income tax law. So as such, there was no, you can say, interpretation was required on the particular aspects or particular ambiguous provisions of the law. But with effect from assessment year 14-15, if I talk about, the focus has been changed. Obviously, the earlier clauses were there, but still the compliance was required, compilation was required, but with some kind of perfection. Because with effect from 13-14 or 14-15, friends, the electronic system was introduced that we have to file tax audit forms electronically. A cross-matching concept was started with the vis-a-vis your filing of return of income. So obviously, perfection was required. With effect from assessment year 2021, friends, professional competence was required because many clauses were introduced which were ambiguous in nature. And I'm saying which are ambiguous in nature even as on date. And the concept was introduced that there will be ITR form which will be pre-filled on the basis of the tax audit form filed by the assessee. And that's why the due dates for tax audit form and ITR forms has been changed. Like earlier, it was the same date. Now it has been changed to 30th September and 31st of October. And now with effect from assessment date 20-23, when the two clauses, clause number 30C and clause number 44, we all know that. Friends, on clause 44, I have seen that webinars or seminars are there of 2 hours or 3 hours, specifically on clause 44 only. Obviously, we are noticing the kind of that complications are there in these particular two clauses. Clause 30C, friends, we are going to discuss in brief what is the requirement and when it is applicable. But there you will find out that the highest level of professional interpretation of the law competency they are expecting from a chartered accountant. Should I take to be in a positive aspect or the negative aspect? I have no idea. Because in case of clause 30C, on the one side, they are expecting that the assessing officer is not a competent person to decide whether there is an application of GAR, General Anti-Avoidance Rules, impermissible avoidance agreement. And for that purpose, he requires the help, or you can say the decision of the Principal Commissioner of Income Tax. And ultimately, the final judgment will be of a panel of 3 commissioners. And on the other hand, they are expecting a chartered accountant that we have to make comment whether there is an entry of impermissible avoidance agreement during the year or not. That means the government is feeling that a chartered accountant is even more than a panel of a 3 commissioner of income tax. And that is the respect which is being provided by through Form 3CD that we need to comment upon. But how it is possible in practical life to make comment upon clause 30C, that is next to impossible in my personal view. Next to impossible. So that gives me the negative impression that they are expecting me to make a comment which is not at all possible, and still you can hold me liable for the same. Friends, liability, who is liable for tax audit? Basics we all know. I'm not going to repeat that. Obviously, the turnover is more than 1 CR, but it has been increased to 10 CR, provided some particular conditions are fulfilled, that the receipts and payments in cash are within 5% of the total receipts and payment. In that case, there is no requirement to go for the tax audit up to the turnover of rupees 10 CR, and this provision is applicable for all kind of assessee varying from individual to company. Receipts for the purpose of that 5% condition, we all know. I'm just highlighting one particular aspect. If you go by the act, it does not provide any kind of clarification. It simply says aggregate of all amounts received, including on account of, friends, turnover or gross receipts. That's all. But when we go by the language as used in ITR Form 3, where we need to specify, where we need to comment upon whether the receipts or payments are within 5% or not, they have used the word including the amount received for sales, turnover, or gross receipts, or on capital account like capital contributions, loans, etc. It means in a case of a business, if a sole proprietor introduces capital in the business, or in a partnership firm, if a partner introduces capital in the partnership firm, that will be treated as receipt. That is part of receipts. And vice versa also in case of payments. Obviously, the contra entries are not part of receipts or not part of payments, that we have to take care of. In my view, except for contra entries, all kind of receipts are part of total receipts, and out of which you have to check out whether the cash receipts are within 5% or not. Similarly, in case of payments, that is the language that is there. Provided further that for the purpose of this clause, the payment or receipt, as the case may be, by a check drawn on a bank or bank draft which is not account pay, shall be deemed to be the payment or receipt, as the case may be in cash. Now, for the limited purpose of determination of applicability of tax audit, the payments or receipts other than account pay, check or draft are to be treated as in cash. Now, in practical life, the question arises that who has to decide this particular aspect and what would be the liability thereof. Now, for a very simple question, a particular person is having turnover of rupees, for example, 8 crore turnover. Now, we all know in case of section 40A3, there is general comment that the assessee is not maintaining the proper records by which it can be identified whether the payments has been made through account pay, check, draft or not. Now, if we are making that particular comment in Form 3CA or 3CB that the payments are through account pay, check or not, that is an open issue. Then we need to decide whether to go for audit in this particular case or not. Obviously, when the records are not maintained for the purpose of that payments for expenditure or for regarding 269 SOT regarding the loans, obviously the same principle will apply while determining the audit. But in case if we accept this particular kind of audit in which turnover is more than 1 CR but up to 10 CR, we have to take a declaration from the assessee that why he wants to get the tax audit. Then there should be a tax engagement letter in which it must be specified clearly that I have no proper records. So I want you to go for the tax audit so as to avoid the later on consequences. That such kind of tax engagement audit letter must be with you. Otherwise, if we are doing the audit between the turnover 1 CR to 10 CR without such kind of engagement letter, we could be held liable for charging the fees without any requirement. Praveen Sharma is saying some black batch are visible in right side of the presentation. Some kind of okay patch. Is that so?
Yes, sir. Some patch is there.
No idea, madam. Nothing is from
Now it's
my
removed. This in the center, the patch is removed, but I can see it on the right hand side.
patch, whatever the reason. I have no idea, ma'am. Nothing is visible on my screen. I have no idea on what account it is there. Let me share the screen again by stopping it.
Yeah.
Now, ma'am.
Same situation, sir.
I have no idea the possible reason behind that, because nothing is visible on my screen. I am clearly seeing my particular PPT with the videos of the persons who are online, like Amit Goenka ji. He is with the video on, so I'm able to see him and nothing specific. But is that creating the problem? That particular patch is the big one or very small one on the right side?
Sir, the patches on the right hand side are small, but sometimes it appearing in the middle of screen and covering the whole screen. Cannot read it.
Okay. Maybe some technical issues. I'm an IT guy, not the IT guy. Income tax guy, not the infrastructure guy. So I'm not able to make the comment.
Sir, can you close the PPT and open it again? Maybe that work.
Let me see. Let me see. Now, ma'am.
Same issue, sir.
Praveen Sharma is saying, sir, you need to close some command box of Zoom program, some command. But I have not given any such kind of any command at all. I have no idea. Video, someone is saying that keep your video off, maybe because of that, maybe because of internet issues.
I don't
Let me
think
check.
video could be the reason for it.
I have switched off my video. Is now what about the situation, ma'am?
Same, sir.
Same.
Hmm.
Okay, it's not the video issue. Stop record, disable annotation.
These blocks are increasing once you click on the screen. जैसे आप स्क्रीन पर क्लिक करते हैं तो वीडियो जो साइज है आपका पैच का वो बढ़ जाता है.
What could be the possible issue, ma'am? I cannot make any comment. Let's continue then. Let me see the video window. Now, is that patch has been shifted?
No, sir.
No. I moved the video window, which is being displayed on my screen. Okay. Coming back. Okay. Friends, the thing is that when there is a turnover between 1 CR to 10 CR, okay, and the cash receipts are clearly more than 5%, then there is no ambiguity that we have to go for tax audit. Okay. But hard cash receipts and payments are within 5%. That could be possible. But obviously, the assessee is not maintaining the records which specifies whether the payments and receipts are through account pay, check or draft or not. Now we are doing the tax audit. Friends, we can do the tax audit only if it is required by law. If it is not required by law, and still if we are doing the tax audit, in my opinion, it could be treated as a professional misconduct by us. That we are charging the fees from the assessee, but it was not required at all. So in that case, we need to be safe enough that it is clearly stated in the engagement letter that the tax audit is required in view that the proper records are not maintained. And to be on the safer side of the law, we are approaching you as a tax auditor. Please do the tax audit. And for the limited purpose of tax audit, we are assuming that the payments are not through account pay, check or draft and not for other purposes. Because if in case we go for the tax audit between 1 CR to 10 CR on the assumption that the payments and receipts are not through account pay, check or draft, it could be held that the expenditures are made in violation of section 48. Are made in violation of section 40A3. So that we have to take care of. So friends, this decision has to be taken by the assessee, but it must be clear through tax engagement letter. That we have to take care of. Is that still there, the problem? Nitinji is saying they're unable to see tax on slide. Nitinji, is that problem continuing? Let me do one thing. Let me change the camera then. Now, is that the problem has been resolved? Okay, it may be because of that I'm opening the chat box and that chat box may be creating the problem. That could be the issue, I think. Ma'am, should I log in again? As the participants are requesting that I should log in again. Are you there, ma'am? Okay, I'm just log out and log in again within a minute of time.
The issue is still there.
Ma'am, that may be.
Issues. Yeah.
But I'm facing this particular aspect first time in the webinars. I have no idea. Yeah.
Maybe you can use PDF instead of this web PPT, if that possible, or try to share any plain slide.
Okay, I got your point.
You can make out whether it is because of PPT or some other reason.
Yeah, it's a PDF is there.
Shall I try by sharing my screen?
Let me see, ma'am. Now I've shared that particular PDF file. So is the same issue?
Same issue.
Same issue batch. Abhi bhi aa rahe, ma'am.
अभी भी आ रहा है सर पैच।
तो ये शेयरिंग के समय आता है ना, आई थिंक विदाउट शेयरिंग नहीं है।
विदाउट शेयरिंग नहीं आ रहा। लेट मी शेयर द व्हाइट बोर्ड, आप देखिएगा, लाइक उससे शायद आपको आइडिया लगे। Is there any patch on this whiteboard?
नहीं मैम, अभी तो नहीं है कुछ भी, मेरे को तो नहीं है विजिबल ऐसा कुछ।
Hmm.
मैं इधर से व्हाइट बोर्ड पे देखता हूँ, व्हाइट बोर्ड पे कोई इशू है क्या? व्हाइट बोर्ड, आई हैव शेयर द व्हाइट बोर्ड। अभी आ रहे हैं मैडम पैच?
हाँ सर आ रहा है।
यहाँ से क्या टेक्निकल प्रॉब्लम है, आई हैव नो आइडिया क्यों जा रहा है ऐसा।
तो वी कैन एक्चुअली हमने सबके साथ पीपीटी शेयर करी हुई है, तो वी कैन कंटिन्यू विद दिस थिंग।
ओके ओके, नो इश्यूज।
Notes are already shared. Amit ji, even if I can share the PPT, I will not be able to navigate it according to sir.
चलते हैं जी आगे। Friends, if turnover is between 1 CR to 2 CR and eligible business is there in terms of section 44AD, then obviously we have to take care of that particular aspect, whether is eligible or not. And we all know that section, in case of section 44AD, tax audit is applicable only in case when you have opted in once. In case if you are not opting for 44AD at all from the very beginning, then there is no requirement to go for section 44AD audit at all. That means, like for example, when tax audit is applicable in section 44AD, like in Y1, that denotes year 1, you opted for 44AD. In year 2, again you opted for 44AD. In year 3, you opted for 44AD. Now in Y4, you are eligible for 44AD, but you opted out. In that case, audit is required for Y4 to Y1. But in case in Y1 only, although you are eligible for 44AD, but you have not opted for 44AD at all, you are maintaining proper books of accounts, you are calculating your income as per normal provisions of the business head, then there is no requirement of tax audit even in Y1 and even in future years. So section 44AD read with 44AB is triggered only in case once you opt in for 44AD. So that you have to take care. Section 44AD 6% excluding or including, that I'm coming to later on little bit, whether for the purpose of section 44AD GST will be included or not. Professional, we all know, more than 50 lakhs. Now friends, regarding the chartered accountant, or regarding the, I'm not saying the chartered accountant, partner of a particular partnership firm. We all know that the salary and interest, two things, these are taxable under business head. In case of a partner, there is no doubt in that. Profit share is exempt. Now the question arises, if a partner of a firm receives salary, interest and profit share more than 50 lakh or 1 CR or 2 CR or 10 CR, whatever the condition applicable, then whether that particular partner is required to maintain books of accounts and to get such books of accounts audited. Now that is an open issue. In the CA Institute revised guidance note of 2022, it has been specified that in case of partner, there is no requirement to go for tax audit, relying upon the one of the High Court judgment of 2022 only. Okay, with due respect to that particular High Court, with due respect to the Institute of Chartered Accountants of India. Friends, there are some contradictory judgments are also there. Old judgments, if I talk about, in which it has been specified, no, even partner is required to maintain books of accounts and to get audit. And even in one of the judgment is in respect of a chartered accountant or partner of a particular partnership firm. And moreover, this particular aspect, the intent of the income tax department can be derived from various factors. One of the factor, initially when the division of income tax forms was introduced, like ITR 1 is meant for those persons, then ITR 2, then ITR 3 and all sort of aspect. Initially, if the business head is applicable only because of the reason that you are partner in a firm and you are not carrying on any business activity in your personal capacity, then it was required to file ITR 2 and not ITR 3. But this situation lasted only for 1 year. In the next year, the government changed the income tax rule number 12 and specified, in case you are partner in a firm, then you have to file ITR 3. ITR 2 is not allowed. And on ITR 3, we need to select business code. And as soon as we select business code 00001, friends, initially in that year, the P&L account and balance sheet in the ITR used to be gray out. Gray out means you cannot fill balance sheet and P&L account as soon as you select the business code to be 00001. But again, that particular aspect lasted only for 1 or 1.5 months. And the government changed the utilities, revised the utilities. And in the revised utilities for that year, even if you selected the code 00001, still balance sheet and P&L account were not grayed out. That means the government has the intent, has the interpretation that even in the case of partners, they are supposed to maintain books of accounts depending upon the quantum of remuneration, interest, and profit share. The last nail and the last supporting evidence that in case of partners, the tax audit is required. If you go by the tax audit form in clause 10, it is need to be specified. It is need to be specified. Nature of business or profession. Nature of business or profession. In that case, if you go for the drop down menu, it is 100% same, which is there in the ITR. And even in case of 3CD form, nature of business includes one of the option, that is 00001. In case the lawmakers or the government has the interpretation that the partners are not required to go for the tax audit, then why the column 0001 is there in the case of that form 3CD? So that gives the comfort from the income tax department perspective that they have intent that even in case of partners, books of accounts are required to be maintained and tax audit is required. So that you have to take a decision. Obviously, the decision is to be taken by the assessee only, whether the tax audit is required or not. Tax audit is required or not. Now, what is your view, friends? Whether for the purpose of determination of applicability of tax audit, for the limited purpose, I'm asking you whether tax audit is applicable or not, GST is to be included or not. Turnover word that is used under the various provisions of the law, and we're required to compute turnover for various purposes. If I list out one purpose is that I already discussed with you, that is applicability of tax audit. Applicability of tax audit. Second, for determination of income under section 44 AD or ADA. Possible है? Third, for the purpose of clause 40, that is ratios. उसके लिए भी चाहिए. Is that required or not? Yes, it is required. So whether GST will be included for the purpose of determination of turnover or not, that is a contentious issue, ambiguous issue. And even if you go by the guidance note issued by the Chartered Accountants of India, friends, they have not provided any kind of 100% clarity. They are simply saying that it will depend upon your method of accounting, which is being followed in books of accounts. If in books of accounts, you are following exclusive method of accounting, that is GST is not included while calculating sales and purchases, that is exclusive method of accounting, then GST will not be included for the purpose of determination of turnover. But if you're maintaining books of accounts on the basis of inclusive method of accounting, then GST need to be included. Friends, in my practical life of last, if I talk about 15 years of experience, I have never seen any organization books of accounts maintained on the basis of inclusive method of accounting at all. And even if we go by the accounting standards, they also say that the books of accounts need to be maintained on the basis of exclusive method of accounting. Now, again, in that particular case, I do not agree personally with the views provided in the guidance note of the ICI. Reason being, if you go by the section 145 capital A, 145 capital A, that says, for the purpose of determination of income. Friends, I'm highlighting the words for the purpose of determination of income under head business, profits and gains of business or profession, or income from other sources. The sales, purchases, inventory need to be accounted for inclusive of goods and services tax. 145 clearly says कि sales में GST include होगा, that GST need to be included in sales. But the thing is that the one school of thought simply says that 145 capital A starts with the word for the determination of income and not for the purpose of determination of applicability of tax audit. Friends, in my view, if I talk about when we say the determination of income under head PGBP, and PGBP head includes section 44AA and 44AB. So in my view, 145A provides turnover for the purpose of determination of tax audit also. Otherwise, it will be like you can say that the two views you are taking for the two purposes. I do not think so. Like for the purpose of determination of income, the GST need to be included, but for the purpose of determination of applicability of tax audit, GST will not be included. I do not agree with this. Friends, tax audit is also part of Income Tax Act. Moreover, one more comfort I will derive regarding my particular opinion in respect of ICDS. We all know the concept of ICDS, total line ICDS are there. The department was asked several questions, and in respect of which the department prepared a FAQ and provided answers to those FAQs by way of circular number 10/2017. And in question number 3, it was asked with the CBDT whether GST will be included for the purpose of determination of turnover, whether ICDS will be applicable in case of section 44 AD also. And in respect of that, the CBDT answered that in case of section 44 AD, the 6% or 8% need to be applied on the amount of turnover as after applying the ICDS. And for this purpose, they given the example that in case of partnership firm, if the partnership firm is engaged in construction contracts, then 6% or 8% will be of the revenue, and revenue will be computed after applying the ICDS. Like in case of construction contracts, when we go by the accounting standards, the percentage completion method is need to be applied upon the contract revenue, excluding retention money. But as per ICDS, the percentage completion method need to be applied upon the contract revenue, including retention money. So there could be difference between revenue as per books and revenue for the purpose of income tax. And as per question number 3 of circular number 10/2017, that 6% or 8% need to be applied upon the revenue after application of ICDS. And again, the aspect of ICDS, the ICDS derives power from section 145 only. Then on the one hand, you are saying that the revenue will be counted as per after applying ICDS, but not after applying 145 capital A. That seems to be a little bit absurd interpretation. But as a professional, obviously, we can go by the CA Institute guidance note. I do not think so any problem is there. Any professional misconduct, it will be called. No action can be taken against us as professional in case if we determine the turnover without including the GST, provided books are maintained on the basis of exclusive method of accounting. I hope I am clear, friends, up to this particular stage. Anything if you would like to ask, most welcome. Okay, let's go ahead. Now, turnover, some examples are there which particular aspects need to be included in turnover, which are not to be included in turnover. Friends, trade discounts, we all know that is given on the bulk purchase. Obviously, generally, if I talk about in books of accounts, trade discounts are subtracted from sales. Sales are recorded net of trade discounts only. But if it is not so, then it is need to be subtracted from turnover. Cash discount, obviously not to be deducted. Commission for sales, not to be subtracted. Sale of scrap, goods returned. Goods returned, one highlighting point is there. If in the year 2, goods are returned out of the sales made in year 1, then they need to be subtracted from the turnover while determining turnover for year 2. So even if they are from prior years, they need to be deducted. They need to be deducted. Cash assistance under export schemes, reimbursement of expenses incurred. Again, in that case, if we are charging some reimbursement of expenses and for that purpose, a separate ledger account is maintained in our books of accounts, then only net surplus need to be included in turnover and not the whole amount received. Interest income. Obviously, the turnover will include only those incomes which are part and parcel of profits and gains of business or profession. In that respect, again, clarification is there. If interest income is part of your business income, then only it need to be included in turnover. Otherwise, it is not part of your turnover. Now, for example, a business entity is going for a fixed deposit, and fixed deposit is required on account of requiring guarantee to be given to in respect of exports or whatever. Now, in that case, I'm not making the fixed deposit of idle funds. It is because of a requirement of my business. In that case, whatever the interest income will be there on that particular FD will be part of business income and not part of other sources. But if I'm going for the fixed deposit of my idle funds, then in that case, it is part of income from other sources and not part of business head. I'm ignoring that particular aspect. Now coming to the clause-wise discussion. At the last, I have tried to incorporate clause 44 also. If you say we can discuss a little bit earlier as compared to the last, considering the time requirements or the time available. And the important aspects, friends, you should consider, I will not say even you should, you must go through that. That is the Tax Audit Quality Review Board observations. Friends, in 2018, the CA Institute constituted Tax Audit Quality Review Board. They had several tax audit forms from the income tax department, and they tried to find out the common mistakes, common errors done by us chartered accountants. And they have released a particular, you can say, publication in the month of June 2022 only. What I have heard in the open market, that the proceedings, disciplinary proceedings have been started against 25 professionals in respect of that errors in the Form 3CDs. For common mistakes, they have provided the publications. What is my view? That these common mistakes, maybe the CA Institute may be lenient at this particular aspect. But when these particular common mistakes have been addressed to me, and still if I'm going to conduct such kind of mistakes, obviously the CA Institute is not going to be lenient against me. That is a humble request that we all chartered accountant must go through that particular publication of June 2022. I've tried to incorporate those observations in brief in this particular PPT also. If the time permits, obviously we are going to discuss those. Friends, coming to the main provision, no, I'm not discussing that clause 6 previous year. Coming to this one. Now, which particular clause need to be selected in Form 3CD clause number 8? Like we all know Form number 3CA, it is applicable in case when there is a requirement of audit under any other law. Otherwise, we chartered accountant need to provide audit in Form number 3CB. Now the question arises, which particular clause need to be selected? First of all, we will focus on Form number 3CB. In case of businessman, friends, in case of professional, in case of audit, because of 44 AD, the clauses are clear. The question arises, the confusion arises only in between these two clauses. If audit is there because of reason, and what could be the two reasons? First reason, turnover greater than 10 CR. Second reason, turnover is greater than 1 CR, but up to 10 CR, but receipts and payments in cash are greater than 5%. Now, can you tell me, friends, in this particular case, if turnover is more than 10 CR, which particular clause need to be selected? This first one or the last one? First one or the last one? In case turnover is more than 10 CR. Okay, we are getting the answer that the first one. Now, in case turnover is more than 1 CR and the tax audit is there, then which particular provision? The first one or the last one? In case of second situation, okay, now GSSI is saying the last one, iPhone with the username iPhone is saying the first one. Now, friends, here lies the confusion if I talk about. Why there is the confusion? Because there is a difference between the language used in the act vis-a-vis language used in the form 3CD. If you go by the act, it simply says that the audit is required if your turnover is more than 1 CR. That is simply stated. But in the proviso, it says that if the receipts and payments in cash are within 5%, then 1 CR should be substituted with the words 10 CR. Now, the proviso uses the word if the receipts and payments in cash are within 5%. Within 5%. If turnover is more than 1 CR, if I go by the act, then the main provision is applicable because turnover is more than 1 CR. But if we go by the form 3CD, it says proviso where aggregate cash receipts and cash payments of business exceeding specified limit, and this limit is 5%. Now, in form 3CD language is that the receipts and payments in cash are more than 5%. And by reason of that, if you are doing the tax audit, then you have to select this last clause and not the first one. So that you have to take care. If turnover is between 1 CR to 10 CR, then you have to select the last clause and not the first one. Now, in case of form 3CA, turnover is greater than 10 CR. Which clause need to be selected? I am numbering it 1, 2, 3, 4, 5, 6, 7, 8, and 9. Total 9 drop-down menu options are available. In case turnover is more than 10 CR, which clause need to be selected? To give you the hint or to give me the better decision exercise, out of 1, 8, and 9, because rest of 6 are not applicable in this case, I'm assuming normal business is there. In case of form 3CA, when there is an audit already under any other law, then first one is need to be selected, or the 8th one or the 9th one. Suresh Kumar ji, I agree with your view. That is need to be selected the 8th one. And that has been specified by the revised guidance, tax audit quality review board observations also, that many professionals are making mistakes in case of form 3CA. They are selecting either clause 1 or clause 9. Ideally, it should be selected clause 8. Now, in my view, friends, selecting the clause 8 is not itself sufficient. Along with clause 8, there should be either clause 1 or 9. And I think this is the reason that in case of form 3CD, in the government utilities, the button add is provided. That you can even select more than one clause in form 3CD. If you are doing the tax audit, but it is required to be audited under any other law, then why tax audit is required? Obviously, that communication must also be there in form 3CD. Whether it is because of turnover more than 10 CR, whether it is because of turnover between 1 CR to 10 CR, or it is a professional receipt more than 50 lakh, what could be the reason? Could be any reason. If you select only clause number 8, obviously the true intent or true picture is not communicated to the department. So in my view, along with clause number 8, another clause must also be selected, that there should be selection of 2 clauses. Yes, you are very right that in case of Form 3CA, there should be at least 2 clauses, out of which first one will be third proviso to Section 44A. The biggest that can be challenged on our professional competency is that clause number 8A. We all know the concept of new tax regime. In case of company, this is third year, Section 115BAA. In case of individuals, HUF, this is second year. Now, in case of company, it is quite possible that in Y1 or Y2 already 115BAA has been opted. Now, in case of company, there is no, you can say, option to withdraw the option. In any case, they have to go by the Section 115BAA. There is no other option. So in that, you can obtain the documents, what was the option you have opted for in the last year's form number 10 IC and whatever. But there could be a possibility that this is the assessment year 22-23 is the first year when company is planning to go for Section 115BAA form number 10 IC. In case of individuals, multiple possibilities. This could be the first year when he's going for the new tax regime. Another possibility that he has already opted for new tax regime, but he may be planning to withdraw the new tax regime from this year. That is also the possibility. Now, the question arises that tax audit need to be certified by 30th of September. ITR is required to be filed by 31st of October. And in case of Section 115BAA and BAC, the option is need to be opted by 31st of October on or before due date of ITR and not due date of tax audit. Now, as an auditor, how can I certify that assessee will be continuing with new tax regime or will be opting for new tax regime? How will you certify? We can ask the assessee to file the form 10 IC or 10 in advance. But still, friends, it is quite possible that in case of individuals, he may not opt for new tax regime. Or maybe vice versa. So in any case, in my opinion, the only option is that you have to obtain MRL from the assessee regarding the option of all tax regime versus new tax regime. And you have to specify that particular aspect in Form 3CA or 3CB in column meant for observations, that relying upon the management representation, the column number 8A and the corresponding or the consequential provisions in the Form 3CD have been certified. Friends, we have to take care of this aspect. Nidhar, 8-way is very clear that we are not handling the tax audit professionally at all. I hope I'm clear with this particular aspect. This clause 8A, please handle it professionally. Otherwise, we will not be available with any defense in case disciplinary actions are being started. And what I have heard that in the open market, the department has started levying penalty under Section 271J on the chartered accountants. और अगर chartered accountants पे वो 10,000 की penalty levy होती है, then kindly assume that the disciplinary actions may be there, other consequences may be there. 10,000 may not be a big amount, but other consequences may hamper your practice. Now, one question from you, friends. In case there is a disallowance by the Act as well as ICDS, like best example, if I talk about depreciation as per books, Section 32 provides in itself a separate calculation mechanism of depreciation. ICDS obviously denies depreciation as per books. Now, whether that particular depreciation as per books need to be reported as part of ICDS, clause number 13D and 13E or not. There could be various other examples which are denied by the ICDS as well as the Act. Whether these need to be provided twice, or simple questions whether it is need to be provided as part of clause 13D or 13E. What is your view, friends? It could be possible that employees' contribution is being denied by virtue of ICDS as well as by the Act. Friends, in my opinion, no. ICDS is a part of delegated authority.
ಹಂಗಲ್ಲ ಬಸ್ರ ನೀವು ನೋಡಿ ಕಲಿಬೇಕು. ಏನ್ ಗೊತ್ತಾ, ಒಬ್ರು ಬೇಗ ಹೋದ್ರೆ ಎಲ್ರಿಗೂ ಹೋಗ್ಬೇಕಲ್ವಾ, ಅದಕ್ಕೋಸ್ಕರ.
Coming back. So friends, ICDS is a delegated power regarding ICDS and by which the ITCDS has been notified. In case any particular expenditure is denied or disallowed by the Act itself, how can ICDS operate upon that particular expense? Because ICDS need to be applied only after applying all the provisions of the Act and not before that. And why I'm giving this particular view? Friends, the thing is that I have seen several notices in the market in which depreciation as per books is notified as part of clause 13. And the department issues notice under section 143(1) that there is a some disallowance stated in tax audit which is required to be disallowed, but you are not making any kind of disallowance in the ITR. Why it should not be disallowed? We used to give against the notice 143(1) only the written remarks. We cannot make any attachment and something. And I have seen many cases that the persons on the other side are not able to appreciate that particular aspect, and double disallowances are there. My view is that if anything is disallowed by the Act itself, ICDS cannot come into picture at all, and that amount is not required to be reported in ICDS clause number 13D and 13E. Yes, if you want to, you can specify then as part of 13F the disclosure requirements of the ICDS, and I think that is more than enough. That is more than enough. Clause 14, method of valuation, and section 145 capital A. In that respect, Tax Audit Quality Review Board has specified again, although it was specified in guidance note also from the very beginning, that the section 145A uses the word inventory and not the closing stock or stock in trade. When they use the word inventory, that means method of valuation is need to be specified for all type of inventories. All type of inventory does not mean the nature of products I'm dealing with. The types of inventory means for the raw material, for finished goods, for work in progress, etc. The method of valuation need to be specified separately in Form 3CD. The Tax Audit Quality Review Board has made the observations that the chartered accountants are specifying that method of valuation in a single line item for all type of inventories and not separately. So for raw material, separate option you have to select. It is quite possible that the method of valuation is same for all type of inventory, but still need to be specified separately for each item. So that we have to take care of. Conversion of capital asset into stock in trade. I'm not going into these, friends. Whatever the heading clauses there is no such as such technical in my view. Clause 16. Okay. Clause 16 says that you have to specify the amounts which are not credited to P&L account. Now, I receive a particular query many times this year. What they are doing, like in case of sole proprietor, they are maintaining single books of account. That means for his personal transactions as well as business transactions, there is no separate balance sheet, no separate profit and loss account. All incomes are accounted for in single books of account. But when they prepare P&L account, that includes only business incomes and not the personal one. In balance sheet, In capital account, they show as addition, add, saving bank interest, add, rent. Now, the thing is that when the professional is doing audit of this particular P&L account and this balance sheet, obviously these incomes are not credited to P&L account, not credited. And they used to specify this particular aspect in clause 16 also, that there is a saving bank interest which is not credited to P&L account. There is rent income which is not credited to P&L account. And they are saying that they are receiving notice from the income tax department that in clause 16, some incomes are specified which are not credited to P&L account, but are not added to income in ITR, in business head. Friends, obviously these incomes are not required to be reported as part of business head, not required to be included. They are part of other heads of income, but still double additions are there. First of all, in my opinion, the business books and personal transactions must be segregated. We should go by the accounting concept which we have read in the 11th class. That in case of sole proprietor, the businessman is a separate person and business is a separate person, and accordingly books of accounts are required to be maintained. Friends, it will be very difficult in case of scrutiny or assessment to explain the transactions, and unnecessary. As professionals, we are auditing those aspects which are not required to be audited at all. If there is a single set of books of accounts, even we have to make comment upon the deductions under chapter 6A also. And obviously that is not the requirement. We are supposed to audit only business books and not the personal books. So kindly educate your clients, assessees, that kindly maintain two separate books of accounts, for business separate, for personal separate. Go for two bank accounts. Go for two credit cards if required. Don't do any kind of personal transaction from the business bank account and vice versa. If you are maintaining books of accounts on this particular basis, obviously in clause 16, you need to certify whether a particular amount is credited to P&L account or not. In that aspect, we are right. (43) CA and 50C. First of all, the Tax Audit Quality Review Board has made the observation that the transaction in which sale price, even if it is more than circle rate, you all know the concept of circle rate. The technical word is stamp duty value, or the value on which stamp duty has been levied. The Tax Audit Quality Review Board says even if the sale price is more than this particular value, still the transactions are being reported as part of clause 17. They have said that this clause 17 is applicable only in case if the transfer price is less than circle rate or stamp duty value. Otherwise, the transaction is not required to be reported. Another thing, friends, section 50C, comment is not required in case of individuals or HUF if that particular asset was held as personal asset and not as part of business. Again, if we are maintaining a single set of books of accounts, we need to make comment upon 50C also. Otherwise, it is not required. Now, the question arises whether the reporting is required only if its difference is greater than 10%, or it is required to be reported, it is more than enough if sale price is less than circle rate. Friends, we all know that under section 43 CA and 50C, the relaxation of 10% is allowed. Now, the reporting is required only in case when section 43C or 50C are being attracted or triggered, or for every transaction where there is a sale price is less than circle rate, that is difference is within 10%. The language suggests that if sale price is less than circle rate, transaction is required to be reported. Where the difference is more than 10% or less than 10% does not make any difference. Obviously, the computer is going to check out that the difference is more than 10% or not. And accordingly, they will take up the transaction in ITR whether addition is required or not. If sale price is less than stamp duty value, that is required to be reported. We have not to go by the what is the fair market value at all. That is not our task at all as chartered accountant. It is quite possible that market value is less than circle rate, and that particular challenge could be raised by the assessee with the income tax department for determining the income. But that is not required from our end point of view. And friends, please remember how the 10% is need to be calculated. I have seen in the open market what the people are doing. Obviously, they have the different intent. Like for example, the market value is 1 CR. Now the people ask the professionals, कि जी कितने रुपए में बुक्स में बेचूं? That means the बाकी में डिफरेंस कैश में ले लो. तो वो 10% निकालते हैं. वो कहते हैं जी देखो जी एक काम करो आप क्या कहते हैं 10% डिफरेंस तक बेच सकते हो. तो पता चला सर्कल रेट भी कितना 1 करोड़. अब उससे पूछा जी हाँ जी कब तक? तो उन्होंने एडवाइस दिया जी 90 लाख में बेच दो कोई प्रॉब्लम. When this particular relaxation of 10% is provided in genuine cases और वहां पर law other way around है. That says that if your sale price is within 10% of circle rate, 10% किसका कैलकुलेट करना है? Of circle rate. If the sale price is 90 lakhs, the person will be in the problem, because if we talk about the 10% of the circle rate, friends, it is not within 10%. Sorry, I have taken a wrong example. So that we have to take care of that कि circle rate का 10% compute करना है, ना कि actual sale price का. Yes, Mr. Suresh Kumar. Clause 20 now no more relevant if I talk about, because the law has been amended. Earlier there used to be a debate that employees contribution कब तक जमा कराना है? Due date of relevant act, that is by 15th of next month, or due date of ITR, that is on or before 31st of July or 31st of October. Now this has been resolved by making the amendment in the law with effect from assessment year 21-22, that in any case employees contribution is need to be deposited by due date of the relevant act, that is 15th of next month. The only question is that how the next month will be determined. Like in general practice, what is the system? That salary of May month is paid on 7th of June. Now in that case, the employee's contribution, which is deducted from the salary of May month, which was paid to the employee on 7th of June, for this due date will be 15th of June or 15th of July. Hanji, what are your views? Salary in relation to May paid on 7th of June, out of which employee's contribution is deducted by the employer. Now for this particular employee's contribution, due date is 15th of June or 15th of July. We are getting the contradictory views. One of the viewer we are getting that 15th day of July, another viewer we are getting that 15th of June. Friends, no doubt this is again an ambiguous or debatable issue. My strong belief is that the due date is applicable only when it has been deducted from the salary of the employee. And it is deducted from the salary of the employee only in 7th of June and not in the month of May. Unless and until I have deducted, how it can be said to be that it is deducted from the employee's salary? So what I have strong view that for this purpose, the due date is 15th of July and not 15th of June. And I think this view can be taken by the assessee also while filling up the form 3CD. And I do not think so any problem will be there in the processing. Section 40A3, all we know the issue. 40I and I. The provision we know. The TDS is required to be deducted. In case it is not deducted, the expense will be disallowed. In case it is deducted but not deposited by due date of ITR, again the expense will be disallowed. The difference, if I talk about in between the payment to non-residents and resident, is that in case of non-resident, if there is a non-compliance of TDS, then 100% of the expense will be disallowed. पीयूष जी, आपसे निवेदन। पीयूष जी हैं, क्या नाम है इनका? पीयूष धार सर, आपसे निवेदन कि जूम पे थोड़ा सा इस तरीके के ना करें। Friends, in case of resident, 30% of expense is need to be disallowed. Now, you must have received notices. You must have faced the particular aspect last year that there were several notices under section 143(1) in respect of this clause 21 that as per form 3C disallowances of rupees 100, but in ITR you have made the disallowance of rupees 30 only. Why not the difference of rupees 70 is being disallowed? Now the question arises in form 3CD in case of payment to resident. If there is a non-compliance of TDS, whether the whole payment is required to be reported or only the 30% of that. That means if I'm making a payment of rupees 100 to a resident on which TDS has not been deducted, whether in case of form 3CD, the 100 rupees is required to be reported or rupees 30. There is no clarity if we go by the tax audit guidance note. There is no clarity at all. The word that has been used is that amount of payment. If you go by the columns as used in form 3CD, it says the amount of payment. And that gives the impression that the 100 rupees is required to be reported. Friends, in Tax Audit Quality Review Board, there is some observation in respect of clause 21. If I try to derive, you can say, the interpretation of the language used by the Tax Audit Quality Report. Even the Tax Audit Quality Review Board has not made any comment upon this particular aspect, but the language suggests that only the amount inadmissible under section 40 is required to be reported and not the 100% amount. So in case of resident, what is my view that only 30% is required to be reported and not the 100%. Contingent liability only if debited to P&L account does not requires discussion. Coming to this particular gratuity provision, I have seen many cases where there is a provision for gratuity in books of accounts, which is reported as part of Form 3CD under clauses in relation to 40A7 as well as 43B. But then if we go by the as part of ITR, it is reported of part of 40A7 or 43B. Obviously, double reporting will not be there in ITR. That will lead to double disallowance. But in Form 3CD on the safer side, we used to report as part of both as part of 40A7 as well as 43B. Now, the question arises when there is a provision for gratuity which is debited to P&L account. Is it disallowable because by virtue of both the sections 40A7 and 43B? Friends, obviously the section which is applicable for provision for gratuity, in that clause or in that section only that amount need to be reported. Our 40A7 and 43B are both applicable in case of provision for gratuity. There is no difference between these two provisions. Friends, there is a hell lot of difference. Both are mutually exclusive. In case there is approved gratuity fund, in which employer is required to make the contribution, then section 43B is applicable. But in the case it is not approved, then section 48(7) is applicable. So that you have to check out. Friends, provision for gratuity is not going to be disclosed twice in Form 3CD. Only one is applicable, depend upon the facts whether the gratuity fund is approved or not. Interest to MSME, clause 48(2) related party transactions. Clause 24. Friends, anything you would like to ask, most welcome. अगर इन clauses में अगर आपका कोई भी सवाल हो. Remission or cessation, section 41(1). Only one thing I need to address, that because of period of limitation, section 41(1) is not triggered. It may be possible that that is outstanding for more than 3 years, but that does not mean that it is no more payable. So section 41(1), there are plethora of judgments that because of period of limitation act, 41(1) cannot be applied. (43)(b). Now question from you. Whether TDS, which is outstanding as on 31st of March, and generally it is there, is required to be reported as part of 43(b) clause A. Any tax, duty, cess or fee. Whether TDS is required to be reported or not. Very clear. Everyone is very clear that no. Friends, it is not required to be reported. TDS is not a tax, duty, cess or fee. It is just a collection mechanism. Even if you go by the chapter heading under Income Tax Act, it is as a part of a recovery mechanism under the income tax law. So TDS is not required to be reported at all under section 43(b). Now, is there any requirement of reconciliation vis-a-vis past years? Like, for example, in the past years, how much amount have been disallowed must commensurate with the amounts which are reported today. There should be some kind of reconciliation. In my opinion, no. There is no requirement of reconciliation at all. What are the relevant clauses? Any amount which was disallowed under prior years and which is outstanding as on 1st of April and paid during the year. Any amount which is outstanding as on 31st of March of the current year and which is paid on or before due date, which is not paid on or before due date. So no reconciliation is required. Amit Goenka ji, I'm coming to that, whether GST is required to be declared or not. Now there could be one situation, like for example, bonus commission to employees, leave salary. In Y1, they were disallowed on account of 43(b). Now in Y3, friends, they are not paid, but reversed. On account of reason that they are no more payable. कि अब वो payable ही नहीं है. Could be the any reason. And not in respect of bonus or commission or leave salary. It could be in respect of interest also. It could be in respect of tax duty, cess or fee also. It may be in respect of payments required to be made to the use of railway assets. It could be anything. Not paid, but required to be reversed. Now, obviously, if I talk about P&L account, when these expenses are getting reversed, they will hit the credit side of the P&L account. Now, the question arises whether these amounts which are reversed during the year required to be reported as part of 43(b). Required to be reported as part of 43(b). Friends, in my opinion, yes. In my opinion, yes. The thing is that you have to report the opening balances which were outstanding and not paid. तो उसका part तो है. But during the year reverse हो गया तो it is no more payable. Friends, please remember, if it is credited to P&L account while computing the PGBP head income, they need to be subtracted. Why subtracted? Because they were not allowed as an expense in the earlier years. Obviously, they cannot be treated as income of the current year. But they need to be reported as part of 43(b), and you need to give a suitable observation as part of form 3CA or 3CB that this is the particular situation. The amount has not been paid actually, but has been reversed. Coming to GST. First aspect, I'm coming to 43B aspect also, the one of the query whether GST is required to be reported or not. Now, clause 27, it talks about the SANVAT. Even if you go by the as on date, even the clause 27, the notified form 3CD forming part of rules use the word SANVAT. And obviously the GST is not part of SANVAT. But if you go by the utility is released by the government. They use the word GST. Now the question arises whether we have to follow the notified form or we have to follow the government utility, which language need to be followed. And I have seen many professionals that they're saying that we will go by the form which is there as notified and not as per the utility. And that's why GST is not reported as part of clause 27. If you have this particular belief, that is perfectly okay. But then for each and every clause, you should follow the form 3CD as notified and not as part of government utility. Friends, there are a plethora of differences which are there in the government utility versus the form 3CD notified. And you should obtain a signed copy of form 3CD, which must be in the same language as being used as part of notified form. And you must specify this particular aspect while submitting form 3CD online, because in any case you need to capture data in the form 3CD as part of utility and not as notified. You must specify this particular aspect. The scanned copy of the form 3CD duly obtained from the assessee must also form part of attachments of the form 3CD. That you must take care of that particular aspect. So whatever the view that you can take care, but there is a thing, there is a simple principle. If in case the law changes, the wherever the reference of that law is there, that should be automatically treated as being changed. Now the question arises whether TDS is GST is required to be reported as part of 43B or not. In my opinion, yes, because section 145A directly or indirectly says that you have to follow inclusive method of accounting. If 145A would not have been there, obviously there could not be any disallowance of GST at all, even if it is outstanding as on due date of ITR. It is by virtue of 145A only that section 43B makes a complete code, completes law. Otherwise, GST would not have been part of 43B at all. When these are multiple clauses, small one not practically as such relevant in a day-to-day basis, maybe relevant for a particular case and not at large. That's why I'm ignoring these particular clauses. Anything you would like to ask, most welcome to ask. Friends, GAR, we have discussed in brief. The CA Institute, the guidance note suggests that in case the prior year situation is there, there are some proceedings under the GAR against the assessee, then you must report that particular prior year situation as well as development on the same. Obviously, in practical life, we cannot compute the tax benefits of a particular impermissible avoidance agreement unless and until you have access to the balance sheets, profit and loss account of multiple persons involved in that transaction. You cannot determine whether GAR is applicable or not. Even if it is applicable, how much quantum of benefit is obtained by those persons, you cannot determine at all. You must specify this particular aspect in your form 3C or 3CB, that it is not possible to find out the implications of any agreement without having access to the financials of the parties to that particular agreement. So there is a limitation on the perspective of the professional. Friends, coming to this particular clause, clause number 32, change in shareholding. In case there is no brought forward loss, then you have to check out change in shareholding vis-a-vis last year only. Otherwise, there is no requirement to report anything in particular section 79. But in case there is a brought forward loss, then you must report for each and every year in respect of which there are brought forward losses, whether there is a change in shareholding vis-a-vis that year and current year. Because in terms of section 79, the losses are allowed to be brought forward and set off only when the shareholding as on 31st March of the year in which loss was incurred and 31st March of the year in which tax audit or in which set off is being claimed, the shareholding is not same. There is a substantial change more than 49%. In case of brought forward losses, kindly check in vis-a-vis that year also, whether there is a change in shareholding or not. In case of speculation loss, there is an explanation to section 73 that says in case of company, if there is a business of shares, then that will be treated as speculative for the limited purpose of determination of set off or carry forward and losses. So that you should take care of. If the company's is business of dealing in shares also, then you need to take care whether explanation to section 73 is applicable or not. Deductions that we have already discussed. In case of individual books of accounts, only those deductions which are to be reported which are evident from the business books of accounts. Otherwise, you are not supposed to make any comment upon the deductions. Friends, I have received many questions that in that case there will be a reconciliation difference between the form 3CD and ITR in case we do not report the life insurance premium, provident fund contributions, etc. Friends, obviously, it is not required to reconcile at all. In case of individuals HUF, the personal books, you are not supposed to audit at all. Ratios. Friends, I think we should go for the clause 44 first. Then we will come to these particular aspects. Let's go for the clause 44 first. Clause 44. Let me introduce the blank screen. Friends, in clause 44, there are several columns. We all know. Column 1, that is serial number. Matter nahi karta. Column number 2, total. Then 3, 4, 5, and 6 in relation to registered entities. And column number 7, unregistered. Yeah, simple. So, Reji, the thing you are asking about is in respect of the private softwares in which there are some kind of problems. So, that obviously the private software cannot override the legal requirements. So that you have to take care. Ideally, in Form 3CD, the deductions which are not part of your business books of accounts should not be accounted as part of Form 3CD at all. And these are the columns. Now, there are various questions in respect of clause 44. First of all, the first question is whether aggregate is required to be reported or for every expense separate line is required to be provided. Like for salary, for interest, for purchases, for packing services, for transportation services. Is the same requirement that for every expense we need to provide separate line item? And there is as such no requirement in the clause 44. In aggregate, you can provide the aggregate of all expenditure. What is required to be included or not, that we will discuss separately. But in case if you want to report separately, you can. Obviously, you cannot write here the nature of expense. Because of some reason or whatever the reason, if you want to record as a separate line item, you can. Because in the utilities, if you check out, there is a column add. That means you can add various columns in this particular case. Now, it could be possible there are multiple branches. And for every branch, you need to provide separately. You can add. There could be multiple auditors for separate branches. And obviously, the Form 3CD, which will be filed with the portal, will be a single one. In that case, you may need to provide separate line items to have a clarification, to have a control. So it's your choice. Yes, Mr. Sumesh Kumar Jain, if you want to. Sureshji is saying that whether revenue expenditure and capital expenditure can be shown separately. If you want to, you can. But if you are showing it to be aggregate, then it is also okay. There is nothing wrong in that. For whatever reason, if you want to show it separately, most welcome, you go through that. There is no problem at all. Now the question arises, what all type of expenditure will be included in column 2 to 7 and what all not required to be included? First of all, there is a confusion because of the language used by the heading of the various this particular column number 2, 3, 4, etc. Friends, don't go by the heading, go by the intent of the lawmakers. Now, why the income tax department is asking this particular data? How it is related with income tax at all? That you are asking the breakup of the GST? How it is relevant? Even if I'm making purchases from unregistered dealer or I'm making purchases from registered dealer, and registered dealer may be under exempted category or maybe composition or maybe taxable category, how does it make a difference under income tax law? In any case, expenses are allowed. There is no restriction. What could be the relevance? James is asking TDS and TCS. I do not think so. Again, that matters. Because you have to deduct TDS on purchases only if the purchases from a particular person is more than 50 lakhs. And obviously from this data, it cannot be identified whether you are supposed to deduct TDS on your purchases or not. Amir Khanji, the thing is that you need to include GST in your turnover, but not for the purpose of maintaining books of accounts. For the purpose of determination of your income. Friends, coming back to clause 44. Okay, you are asking whether TDS and TCS are to be reported. No, TDS, I'm coming to that later on. Now the question rises why the clause 44 has been included. What could be the intent of the lawmakers or the form 3CD jab banaya gaya? What could be the intent? Friends, in my opinion, as part of income tax, the focus would be going to be upon the expenses which you provide as part of unregistered dealer. In the near future, whenever there will be a scrutiny, obviously the assessing officer's focus will be on the expenses incurred through unregistered dealer, because there is a probability that it could be a bogus as compared to the purchases from registered dealers. So that is the one possibility I'm able to derive considering the income tax law. Yes, GAA. Now coming to what is all required to be included or not. Friends, both revenue and capital expenditure need to be reported. That is, I think, is clear to you all after attending various webinars and seminars. Depreciation. In my opinion, depreciation is not required to be reported as part of clause 44 at all. Otherwise, it will lead to be double inclusion. First of all, as part of capital expenditure, second as part of depreciation. I do not think so. It is required to be included. Not even as part of column 2 or column 3 to 7. Bad debts and provisions. Are they expenditure? No, these are not expenditure. These are losses which are being incurred by the business entity. So in my opinion, that in column 2, these such kind of losses, or you practical life we say expenditure, be reported as part of column 2. But obviously they are not incurred through any particular entity, but they are just a mere book entry in your books of accounts. So they should not form part of column 3 to 7. That gives me the other way around. Friends, it is not required that 2 must be equal to 6 plus 7. It is not required at all. Don't try to make the reconciliation vis-a-vis P&L account. Don't try to reconcile the amounts reported in 3CD versus P&L account. Obviously, you must have reconciliation with the amounts reported versus the amount reported in P&L account. Must be the internal working must be there for the explanation. So friends, don't try to reconcile first of all P&L versus 3CD. Then don't try to reconcile the total of column number 2 with 6 plus 7. There must be internal working with you in any case. आगे देखो. Transactions. Friends, like for example, not supply of services or goods. Like best example, if I talk about under Schedule 3, salary. Now, in my opinion, this is expenditure, but not through a registered entity. It is not a supply of goods or services at all. So it is to be reported as part of column 2, but not as part of column number 3 to 7. 3 to 7. Friends, in case the department has a belief that the 2 must be equal to 6 plus 7, then why the utility is providing to punch data in this particular column? It must have been populated automatically from 6 plus 7. But still we have an option to punch it manually, even irrespective of the amount which you're reporting as part of 6 or 7. So that again gives the interpretation that it should not be equal to 6 plus 7. It may be, but it may not be. Deferred expenditure should not be reported. Only payment and outstanding should be reported. Sureshji, what do you mean by the deferred expenditure? Any example? Like if you want to get JNG, same has a question regarding the deferred expenditure. Like any example, if you take by the nature of expenditure, so that we can able to discuss more better. I got you, Mr. Suresh Kumar. JNG, any example of deferred expenditure which is there in part of books of accounts but not part of clause 44? Friends, non-GST expenditures like petroleum, in my opinion, that should form part of exempted supply. Even if you do not have the corresponding invoice, but obviously the petroleum suppliers, there are good chances that they're part of registered entities. Although on that particular petrol GST is not applicable, but they are nothing but registered entities. Column number 6, in my opinion, should be equal to 3 plus 4 for 5. We should not go by the exact meaning of payments. Now coming to the question regarding the interest, whether it is required to be reported or not. In my opinion, yes. Column 2, yes. Now coming to whether it is part of column 3, 4, 5 or part of 7. Friends, on interest, obviously there is no GST. There is no tax invoice which is being provided by the other person to us. Now, how to determine whether it is part of registered or unregistered? Friends, in this respect, I think one exercise can be done by the assessee. The thing is that if in a particular expenditure GST is not applicable, does not mean that that particular person providing the goods or services is not registered. In case of loans, there are good chances that you are having a PAN number of that particular lender. And I think with the PAN number, we can check out whether that particular person is registered under GST or not. I think that is a very small exercise and not a very big exercise. If that particular PAN is registered under GST, then I think that particular interest expense must be treated as part of exempted supply and not as part of supply from unregistered dealers. Friends, as professionally, what I believe, for a particular inclusion or exclusion of any amount from column number 2, 3, 4, 5, 6, or 7, if I have a reason behind that, single line reason, that means that that interpretation is possible. Then if the department is taking an interpretation other way around, does not make you liable for any kind of professional misconduct or professional careless approach. If you have a reason, like for depreciation, I have a reason. When capital expenditure is included, obviously depreciation is not to be included. For interest, if I check out the PAN number on the GST portal, whether it is registered or not, and if I report it to be as a part of exempted category, where I'm wrong, it is a from a registered person because the GST number is there with that particular person, but it is part of exempted supply. That's why this person has not provided me with the tax invoice. I'm coming to that particular aspect, reverse charge. Now, the Mr. Suresh Kumar Jain is asking whether interest to partner and salary to partners are to be reported or not. If I talk about column number 2, yes. Interest and salary, same decision, which is in respect of employee or the lender. If that partner is registered under GST, then go for the registered. Otherwise, go for the unregistered. Same for the salary. Salary, in any case, in my opinion, is part of column number 2 only, not part of 3, 4, 5, or 6 or 7. Friends, share trading, I think it is a part of, I have no idea about the GST law, but if the person is engaged in the business of dealing in shares, obviously clause 44 is applicable. So whatever the purchases are there, obviously the GST is not applicable. So I think that should be treated as part of unregistered only. And I don't think any problem will be there. In any case, scrutiny is there. Interest, that what is I've discussed, Mr. Suresh Kumar. Interest, in case the PAN is found to be registered under GST, go for the exempted supply, or otherwise go for the unregistered. Only two options are there in case of interest. Column number 3 or 7. Now, what will happen in case of expenditure on which GST is paid on reverse charge mechanism? Friends, in my opinion, that should be treated as part of taxable supply, column number 5. That is my personal view again. Reason being, it is because of reverse charge mechanism that GST is being paid, and ultimately GST is paid on that expenditure. If the reverse charge mechanism would not have been there, the other person, the supplier, would have to be registered under GST and pay tax. So because of that reason, what I believe that it should be reported as part of column number 5 and none other than column number 5. That is my personal view again, because ultimately the GST is being paid on that particular expenditure. Suresh, I got your particular point. That is interpretation is there. Mr. Suresh is showing a valid point that clause number 44 uses the word non-taxable entity. In my view, that we should go by the intent of the lawmakers and not by the language of the notified form. Obviously, the notified form, it cannot be interpreted word to word. If you try to interpret word to word, then in that case, I think it will not be possible to report under clause 44 at all. Because it somewhere says amount of payments, it somewhere says expenditure. Now, if you go by the legal interpretation, whatever the kind of losses are there, what a kind of losses, bad debts, provision for bad and doubtful debts, what all type of provisions are there, not possible to report. Now, whether you are going to report clause 44 on the basis of accrual basis of accounting or not. Like, it is quite possible that during the year expenditure is incurred in advance, like insurance premium is paid for 3 years. Quite possible. But on accrual basis, the insurance expense will be allowed only in part in first year. Now, whether you are going to report for all 3 years or 1 year, again, that is a question. So I think the basis should be that your P&L account, whatever the expenditures are debited in P&L account should be the base. Out of those expenditures, we should try to find out whether reported to be clause 44 or not. Anything which is not part of clause P&L debit side except for capital expenditure should not form part of clause 44 of this particular year. Friends, amortization, I do not think so that is even required to be reported as part of column number 2. Again, that is an appropriation of an expense. Appropriation of an expense. Whatever the appropriation of an expense is there should not be treated as part of column number 2 even. Because whenever you acquire the intangible asset, it becomes a part of capital expenditure. So first of all, clause 44 is need to be reported on the basis of your P&L account, but don't try to reconcile. Whatever the expenditures are debited in P&L account, that only need to be accounted for, except capital expenditure. Any expenditure which is paid in advance should not be accounted for. Provisions, bad and doubtful debts, bad debts should not be accounted for as part of column number 3, 4, 5, or 6 or 7. Again, they are appropriation, but should be reported as part of column number 2. Friends, again, I'm giving the disclaimer. These are the personal opinions, but to be relied upon on any opinion or any view, you must have at least one-liner reason that why you are including a particular amount or why you are not including a particular amount in clause number 44, and you should state that particular aspect in form 3C or 3CB as part of observations. You state that particular aspect. उसको लिख दीजिए वहां पे. Friends, use form 3CA and 3CB, the observations column number 3 and 5 as a tool, as a sword, और ढाल को इंग्लिश में क्या कहते हैं, as a protected defense mechanism and to attack also. whatever you state in Form 3C or 3CB will safeguard you, will acknowledge that you have applied your professional mind, and because of ambiguities, you have no other option but to report such a thing. Any question, friends? Regarding clause 44. Brigendra, yes, please, you must have a reconciliation with you in your audit file. P&L account, total of expenses versus amounts reported in clause 44. And again, you must have a reconciliation, the amounts reported in column 2 versus 3, 4, 5, 6, and 7. Hona chahiye. And the policy, the reasons why that particular expense is not reported as part of 2 to 7, you must have that writing in your file. You will not be able to recall anything after 2 years. Can we proceed with, friends? Anything you would like to ask? Otherwise, we will continue with the remaining clauses. आमिर खान जी कह रहे हैं, he is my fan. आमिर जी एसी चल रहा है रूम के अंदर. Although, thanks for giving such appreciation. Coming back, friends, ratios. Now the third aspect, turnover. Now, in my view, in the case of ratios, turnover is required to be reported as per books only. While reporting turnover in clause 40, there is no requirement to apply section 145 capital A. There is no requirement to apply ICDS. Whatever turnover is there as per your books, that is need to be reported. One of the tax audit quality review board observation in this case, that the peoples are reporting net profit after tax, but they have specified that net profit before tax is required to be reported and not after tax. In case of a person engaged in service sector, only net profit ratio to be disclosed. GP ratio is not required to be disclosed. Friends, that is a personal advice, that whatever the GP ratio or NP ratio is there as per Form 3CD, that must reconcile with the whatever the gross profit and net profit are being reported as part of ITR. There should not be difference, otherwise that may lead to the problem for the assessee. जयन जी, DTAA I have never referred to, हमने उस पर discussion नहीं किया. आपकी जो भी query you can ask. And how to report discount. Brigendra, you are talking about clause 44. Brigendra, regarding discount, you are talking about clause 44. The question arises in respect of cash discount. Friends, if there is a trade discount, obviously you can say the purchases are recorded net of discount. So I do not think so trade discounts creates any kind of problem. The problem arises maybe because of that cash discount. So again, if I talk about the cash discount, that is nothing but an expenditure for me. I think it should be reported as part of clause 44, first of all. Now the question arises whether it is part of clause number 6 or 7. So it depends to whom you have given the cash discount. To whom you have given the cash discount. So it depends on that particular aspect. Obviously, the cash discount is given to the customers for making the prompt payment. So you may have to identify whether that particular customer is a registered entity or not in the GST. It depends on the invoices you raise. If you are raising the B2B invoice, then you know that that particular customer is registered under GST. Otherwise, he is not. Friends, stock in trade. In clause 40 ratios, the word that has been used as stock in trade. Regarding that, the CE should guidance note that when the word stock in trade used, only the closing stock of finished goods is reported and not others. That means you are not supposed to include the raw materials. You are not supposed to include the work in progress. You have to provide only the closing stock of finished goods, because only the finished goods can be state stock in trade and not other way around. Now the question arises. Now, friends, just a small example I'm taking. This is a trading account. Sales 4 CR. Gross profit. Interest, rent, and multiple incomes. And this is net profit. Now in clause 40, you have to report turnover only once. Only once. That turnover will be reported along with as part of GP as well as part of NP. But when we talk about net profit, that includes these incomes also. Obviously, the basis for numerator and denominator while calculating the ratio is not same, but there is no other option, friends. Again, in that case, net profit, in my view, is to be reported as per books only. In net profit, there is no requirement to exclude these incomes. Now, hypothetically, even maybe in practical situation, it is quite possible that NP ratio is higher than GP ratio. And because of these incomes, and it is quite possible. Please state that this particular aspect. Fin Vedaji, I have no idea whether vertical format of financial statement is compulsory for non-corporate SSC or not. I have no idea in this particular aspect. Suresh Kumarji has given that answer to your query. Thanks to Sureshji. So friends, don't try to make the numerator and denominator basis same. State this particular fact in form 3CA or 3CB that net profit includes these incomes also. And accordingly, net profit ratio has been computed. Friends, deep dividend. How will we be able to comment? Friends, this problem is there since last year because let's try to recall the history in respect of deemed dividend of section 222E. What was the situation earlier around 4 or 5 years back? For dividend, company was required to pay CDT and it was exempt in the hands of shareholder, except 222E, which was taxable in the hands of shareholder. A shareholder word is little bit wrong. Reason being, there is a situation that company A gives loans to company B. And there is a common shareholder who holds 10% shares in company A and minimum 20% shares in company B. And I'm assuming all other conditions of section 222 are fulfilled. That means this particular loan constitutes dividend under section 222E. Now the question arises whether this particular dividend will be taxable in the hands of the borrower, that is company B, or will be taxable in the hands of the common shareholder, for example, Mr. X. When this particular dispute went up to the level of the Supreme Court. And the Honorable Supreme Court that in any case, dividend can be taxable in the hands of the shareholder and cannot be taxable in the hands of the borrower. Okay, that was the Honorable Supreme Court judgment. Law is totally silent in this particular aspect. Now, the department may have realized a particular problem that in case of scrutiny of Mr. X, it will be able to identify whether he is a shareholder of two companies and these two companies have transaction in between them regarding loan. It is very difficult. So the department may have an apprehension in their mind that in the practical life, they will not be able to catch this transaction at all. And if I'm not wrong, by Finance Act 2018, they said that in case of dividend under section 222E, there will be corporate dividend tax of 30%. And it will be exempt in the hands of the shareholder. The problem was resolved. कि ठीक है, at source ही tax ले लेते हैं, काम खत्म, देखने की जरूरत ही नहीं पड़ेगी. Obviously, friends, company ने अगर non-related party को दिया है तो applicable नहीं है. 222E, there is a condition that you should go through कि shareholder को दिया हो या ऐसी entity को दिया हो जहां पे common shareholder हो या किसी third party को दिया हो for the benefit of shareholder. Now, friends, last year, if I'm not wrong, last year, friends, all the dividends have been made taxable in the hands of shareholder. all dividends. Now, the same dispute which was resolved by the income tax department earlier is now into picture again. That in case of 222 is similar situation in whose hands dividend will be taxable. Obviously, as per Supreme Court judgment, which is still valid as on date, it is taxable in the hands of the shareholder. Now, in case if you are doing tax audit for company B, whatever the loans it has obtained, you are not supposed to report. You have to check out whether it is from an entity in which he is a shareholder or not. That's all. आपको common shareholder देख के comment करने की जरूरत नहीं है. If you are doing tax audit of shareholder Mr. X, if you are able to determine from the books of business books, not books, business books of Mr. X, that is a common shareholder in two entities, then you should ask the financials of these common two entities, A and B. And in case the assessee does not provide, you should simply state a fact that we have checked the business books of the Mr. X. That was the scope of limitation. No other document was provided, and it is not possible to judge any kind of implication of 222E. When direct loan liya, then we need to report. We have to check out. But if there is no direct loan, then we cannot obviously make comment, and we can rely upon Honorable Supreme Court judgment. I do not think so any problem is there in that particular aspect. (41, 42, 42) friends, that we need to take care of. Whether the assessee is required to furnish form number 61. Friends, in that respect, I have to make comment only on one of the transaction where form 61 is required. In case if a person is making sales or providing services of invoices of more than 2 lakh, then as per law, it is mandatory to mention PAN of both supplier and buyer. Obviously, in our invoices, if I am a seller or provider of services, my PAN is there. In case of B2B invoice, if GST number is mentioned, I think lenient approach will be taken because that contains the PAN number also. But it is quite possible that B2C invoice is there and PAN number of the buyer is not there. In that case, the law says that the supplier must obtain the PAN number of the buyer. In case buyer is not providing the PAN, he must obtain form number 60 from the buyer. And he has to submit the details of form 60 in form number 61 on the half yearly basis to the income tax department. So at least on the sample basis or the random basis, we should check out of invoices more than 2 lakh, which are B2C. That is our onerous duty to make comment whether form number 61 was required or not. And in case on your sample, if you are able to find out only even a single invoice which does not contain the PAN number of the buyer, then we must increase that scope of checking of the invoices. Then in that case, we should check out all the invoices of more than 2 lakh rupees. So you should have samples in your books, in your audit papers, that you obtained the copy of the bills of B2C invoices that we should take care of. Friends, documents to attach, that is again Tax Audit Quality Review Board. Friends, again humble request, kindly go through that. I try to summarize selected observations and obviously not all the observations in this particular place. And I think that PPT has been already shared with you. So friends, anything you would like to ask, any question or any query you would like to ask? And would request all the participants to switch on their videos also, if comfortable with them. Okay, I do not think so any kind of queries there. So friends, would like to thanks you all for the patience listening and specifically making it interactive. Friends, really happy that you're keep on asking the queries on the platform. So that really make it interactive. Otherwise, in the webinars, we sometimes have a feel that we are keep on speaking and speaking. That's all, and we are making out our frustrations out of the house. That's all. And would like to thanks the Educating also for providing this particular platform so that I'm able to interact with you all. Would like to thanks friends. and over to educating.
I would.
Yeah. Thank you, sir. Thank you for such nice session. Actually, बहुत सारे changes हुए हैं इस बारी tax audit report में, तो this session is the need of hour. It's very informative. I would like to request all the participants to please give vote of thanks through chat box. Good, ready, Ratner. Yeah. Thank you.
He's asking, Jain is asking, any good ready reckoner for the purpose of tax audit? I do not think so. Go by the CA Institute guidance note. That is the Bible for us. In any case, go with that. And tax audit quality review board observation. These are the two ready reckoners we have. That's all.
He is in final.
Okay, that's nice.
PPT will be shared in the group. Notes in some groups it is already been shared, and where it is not shared, it will be shared by tonight. Thank you. Shrikant is saying, thank you, sir, for explaining with patience.
Shrikantji, regarding this particular comment, I have been married since more than 10 years. So I have developed the patience. No issues.
Yeah. So thank you, sir. Thank you.
Thank you, ma'am. Thank you.
Good night, sir.